What's up, guys? Welcome back to the channel. Today we received a comment from Trucker Day saying, I'm late to this video, but I accept your challenge of a better fund. He thinks FCNTX, the Contra Fund, even with the higher expense ratio, better performance, is a better opportunity compared to FSPGX. So let's break down FSPGX, let's break down FCNTX, and let's get into it. Looking into the Fidelity Contra Fund, FCNTX, it is currently priced at a NAV price of 23.29 with overall 5-star rating, high returns, but the expense ratio is high, and we will get into this. Let's hit the quick facts on it, and let's go into what exactly this fund is. It is actively managed. That is why you pay higher fees. Over 1 year, it's up 21%, 3 years, 28%, 5 years, 18%, and it's averaged 16%. We will compare that to FSPGX, which is my main holding. So let's take a quick look here. Expense ratio at 0.63%, but notice the high turnover rate. So that could cause some tax implications throughout the year because it is actively managed. Your fund managers are William Danoff, Asher Anolik, and Jason Weiner. So they've been in since 2025, and Danoff has been around since 1990. So you definitely have some confidence that you have William Danoff within this. Now, looking at the top 10 holdings here, when you buy the Contra Fund, Meta is the main holding here at 16.93%. And then you have Berkshire Hathaway at 9%, Nvidia 8%, Amazon 6%, Microsoft 5%, and the list goes on. These top 10 companies make up 56.85% of the total portfolio, making up 347 holdings. Is that worth it to you? This fund primarily invest in companies that have over $10 billion in assets, and that are the big dog companies. You can see they compare the quarter-end averages annual total returns of the Contra Fidelity Fund to the S&P 500. It does compete and it does beat it, but you have to look at the fees. Is it justified, the 0.6% expense ratio? Going a little more specific into the composition, you are investing into companies with market values greater than $10 billion that these fund managers believe are poised for growth. Now remember, growth is based on a variety of factors. So they use revenue, earnings growth, and generating capital gains rather than income. You will notice domestic equities is 90%, where international, you will be getting a little bit of the developed markets at 5.57%, emerging markets at 1.5%. So you are getting a little bit of international, which is great. You're focusing on communication services at 25%, information technology at 22%, and financials at 19%. You will notice this is a little different than FSPGX, which we will get into. Regional diversification, United States makes up 90% of this fund, while Canada is about almost 3%, Europe at 2%, and the list goes on. Next, I want to break this down because I think this is very important to look at before we go over performance. Look at the fees and distributions. You are paying $6.30 for every $1,000 you have invested. That is something that you need to consider. That is why some people will buy these growth funds and purchase them within a Roth or a traditional IRA so they can avoid tax implications year on year based on their income. You also receive a dividend history, as you can see. It looks like it's every year you will receive in December, you will receive a dividend. There's also a capital gains history showing that you receive a dividend pretty much once a year. What I like about this fund is a minimal investment of $0, and you can continue adding, and you can do it whether it's in your IRA or a taxable brokerage account. Looking into the performance and risk, this is the overall chart of the Fidelity Contra Fund in purple, comparing it to the blue, which is S&P 500 and a large growth fund. Now, in the last year, we reviewed 21%, but look at the lifetime. That's more important to me. It's been around for longer than 10 years. You've had that manager since 1990. It's averaged 13%. Look at the S&P 500 over the last 10 years, averaging 13.65%. Very close in comparison, and you are paying a high fee for this. Now, when you look at the 10-year mark on this chart and you compare the FCNTX Contra Fund, if you were to invest a hypothetical $10,000 in 2015, FCNTX would be worth $41,331. S&P 500 would be worth $34,000. So it starts to make you think maybe the fee is worth it. Now let's take a look at FSPGX so you can see similar and differences. For the following members that support my channel, you guys know that I am a big fan of FSPGX, the Fidelity Large Cap Growth Index Fund. I have this in my YouTube portfolio for you to see, especially my members getting real-time access. At the NAV price, $41.86. And one of the big things I like about it is you have that 0.35% expense ratio. It has a 5-star rating, high returns, low expenses. And look at the life of this fund right now, 18%. It has averaged yearly, which is excellent. Now let's get into some of the quick facts on this. Going into the top 10 holdings, 58%, similar to that higher expense Contra Fidelity Fund. Microsoft is the leader at 11.37% instead of Meta, Nvidia at 10.5%, Apple at 9%, Amazon at 6%, and look at the difference of Meta, only 4% compared to 16% in the Fidelity Contra Fund. Where this is passively managed is why you get this low expense ratio of 0.035%. Something to keep in mind, that you don't have to worry about expenses eating up your gains. Besides the top 10 holdings, it shows you that normally 80% of the assets in FSPGX are within the Russell 1000 Growth Index, and it is based on a market capitalization weighted index to measure the performance of the large growth segment of the U.S. equity market. For me, simplicity is key. I want something that I can put my money in and continue to get long-term gains. Let's look at the composition in a little more detail. Reviewing the composition here, technology is a major portion of this, 47%. So when you think about it, you have a different asset allocation and you can still make excellent gains. So you don't have to pay high fees to get this. If you're comfortable having almost 50% of a index fund being technology, and you can ride the ups and downs, you will do very well long term. Consumer discretionary, 14%, communication services at 13%, financials at 7%. Looking at the large cap, and invest in companies that are greater than 10 billion that fund managers believe are poised for growth. But you don't have any international really here. I'm not really going to count it at 0.63%. When you buy FSPGX, you are mainly in 99.37% US equities, something to keep in mind for you. And now, the big difference here is look at the inception date, 2016, compared to Contra Fund, which has been around for much longer, and that could be why some people are more comfortable paying that expense ratio. Speaking about expense ratios, look at the expense ratio here, 35 cents for every $1,000 you have invested, compared to Contra Fund, that was $6.30 invested. To me, this is a no-brainer, getting a nice low-cost expense ratio with excellent returns. Moving forward to the performance, looking here at the average annual total returns, look at the life of FSPGX, 18.34%, and the last year was 17%, trailing the Contra Fund a little bit. So overall, we have a higher return, but the inception date is less compared to the Contra Fund, so you cannot ignore those nice gains that the managed portfolio had by active managers. So let's do a direct comparison here, comparing the funds. Fidelity has an awesome feature here where we can see Fidelity Contra Fund FCNTX and then Fidelity's Large Cap Growth FSPGX. You can see here, looking at a 10-year chart, in the blue is FSPGX, the low-cost 0.035% expense ratio, and FCNTX, the actively managed 0.65% expense ratio. If you zoom in and look at the average, FCNTX does trail FSPGX in gains a little bit, but overall they are very close to each other and pretty much mimic their gains. Now, I understand why some people would choose one over the other. This is something you have to make as your own decision for yourself. Looking at the overview, if you just want to actually see numbers, the life of the fund, FCNTX is 13%, but it's been around much longer, and 18% for FSPGX. They are both in large cap growth stocks, but they do have different variety of where that money is being invested. So I just want you to at least be aware of that, comparing that 0.63% expense ratio to 0.035%. But you got to look at the managed tenure here, 9 years in FSPGX compared to 35 years. That is something to think about. Also, the assets. Look at the assets right here. FSPGX only has 37 million in assets, whereas the Contra Fund, clearly investors do appreciate this and they do put their money in, even with the expense ratio of 166 million in assets. The Morningstar rankings, they both get 5 stars. Looking at the income characteristics, not much there. And the short-term performance, you can see year to date right now, the Fidelity FSPGX Large Cap Growth Index Fund is trailing the Contra Fund. And that is because they have different allocations to technology and consumer, etc. So it's not a bad idea to think about potentially maybe adding both and having a nice diverse portfolio of growth, as long as you can justify the sectors that they are in. Looking at the daily pricing yields, just want you to see FSPGX costs $41 per share, whereas FCNTX is $23 per share. And the dividends are very similar. It's actually different dividends here at 0.01 versus 0.14 for FSPGX. So overall, it is a great conversation to have and think about what is the better choice. Is it FSPGX, the Fidelity Large Cap Growth Fund, or is it FCNTX? Guys, if you like videos like this, check out my channel, Trading Simplified. Click on the playlist tab and you will get multiple videos based on Fidelity index funds, ETFs, investments, my Vanguard playlist, going over those. If you're interested in more in trading, you can check out the live pre-market analysis and also day trading on Fidelity over here. There's a bunch on here. And if you really want to support the channel, click on the membership. You gain access to my YouTube portfolio. You will see FSPGX as my main holding. You also get my day trading strategy, VWAP, buying the dip using a pyramid strategy. There's so much on here for you guys. It speaks for itself. We have over 5,000 subscribers. Click the link. You can get more access if you want to directly chat with me through my WAP. Thank you guys so much for supporting the channel. And if you like more videos like this, please hit that thumbs up button and subscribe.